This was gold some weeks ago. This is gold today. While people are currently focusing on this, today I want to focus on this because by focusing on this, I think we can better understand this and ultimately peek into the future. i.e., is it time to buy gold or is this just a bubble waiting to pop? Throughout history, gold has been viewed not only as a scarce asset worthy of our hard-earned labor, but as the very nature of money itself. Today, with inflation expectations rising, fiat coming under heavy scrutiny, worsening fiscal discipline, historically high debt levels, and an increasing fraction of tax revenue servicing that debt, investors are seeking assets that serve as a store of value. But is gold that asset we're looking for, or is it just a fad that will soon pass? This episode is sponsored by Alpha Architect ETFs, but more on that later. Okay, so quick disclaimer, this is not real gold, so please don't try to break into my house and come steal it. This is in fact just cardboard. This would be an insane amount of gold, actually, close to $3.3 million. And if you wanted to steal my gold, you would have to hack into my brokerage account, and that's because my gold exposure is floating somewhere in the ether. So going back a year ago, no one was paying attention to gold. Arguably even 3 months ago, gold was definitely hot, but it wasn't until it started to do this that people started paying attention. An absolute parabolic move, trading like a meme stock in 2021. Today, while the hype has definitely died down, partly due to a correction that occurred in late October, I do think there still is a question lingering in most investors' minds, and that is, should I buy the dip? To answer that, I wanted to first draw your attention to this paper from the Return Stack team titled Golden Opportunities, Enhancing Traditional Portfolios with a Gold Futures Stack. Now, I want you to pay attention to this chart. Since 1971 until 2024, gold has beaten the returns of government bonds, cash, and closely matched global stocks. More saliently though, there was this huge spike in the 70s as inflation and dollar debasement took place. I think when seeing a chart like that, investors wonder whether this sort of spike was a one-time thing or if there could be a repeat of this in the future, because if there's a chance that this could happen again, then I think this brick of metal or cardboard might actually be worth looking into. To answer whether gold represents an opportunity, I asked Mike Philbrick, CEO at Resolve Asset Management Global, to help me understand the history and profile of gold as an investment asset class. Mike has 30 years of experience in the industry, providing investment solutions to Canadian and US-based investors, and is also part of the Return Stack team. Yes, the same team that wrote the Golden Opportunities paper. Not to mention, Mike played professional football in Canada and won the Grey Cup for the Hamilton Tigers in 1999. Just a badass all around. In your opinion, what's the reason that gold has gone up like crazy?
Well, I think it goes actually back to before 2023. It actually goes back to February 2022 when the US, EU, and G7 nations froze the central bank assets of Russia due to the Ukraine invasion. That was a watershed moment that I don't think is talked about enough. Those actions against Russia were the first kind of measures taken of that nature. And that caused central banks to realize that the reserves which they hold in US dollar-based assets via US treasuries weren't quite sovereign enough. And since then, we've seen 1,000 tons of gold per year being bought by sovereign nations. That backdrop set renewed interest in non-liability reserves like gold. It was interesting to see in 2023 how we saw North American investors selling into that rally. And you've had the administration have a stated objective of weakening the US dollar. Lo and behold, the first 6 months of 2025 were the weakest performance for the US dollar since the 70s.
And that's just it. If we view gold partly as a currency hedge, we need to view it not just as an asset that has gone up in it by itself, but one that has partly captured an implied short position in the dollar. At the same time, gold is up roughly 50% year to date. The dollar index is down between 5 to 10%. With Fed independence being brought into question and debt levels reaching over $38 trillion, which I must remind you is 50% higher than it was pre-COVID. There's a real question about the long-term sustainability of the immense debt that we're taking on and the burden that will represent on the taxpayer. I think investors may be looking into assets that do not rely on cash flows to diversify their portfolios.
Gold is kind of this non-cash flowing asset. And I want to come back to the fact that's the feature. It's not the bug. It's the feature. The feature is that it doesn't have a cash flow, but it's not printable either. It's the structural reason it diversifies the portfolio. It must be bought from somebody who already owns it. Some people call it a psychological commodity, if you will. So the idea that it doesn't create cash flow and that is somehow a knock against it actually needs to be flipped on its head when you get into a regime where you have monetary debasement, inflation volatility, and uncertainty with the geopolitical side of things.
Other than the currency hedge, the Return Stack team does go over other characteristics that investors might find appealing about gold, including it being a source of return, a diversifier, an inflation hedge over the very, very long term, and a source of crisis alpha depending on the return regime. Perhaps those may sound like good enough reasons for you to invest. But let's go back to our original question for today's video. Is now the time to buy? Before answering that question, I wanted to talk about today's sponsor, and that is us. Our lineup of ETFs seek to deliver high conviction, highly differentiated strategies for investors and advisors. If you'd like to know more about our offerings, head to funds.alphaarchitect.com. Back to the video. It's always a bit scary when a chart does this. There's a clear level of resistance somewhere in the $4,000 price. But will it hold, or are we about to experience the rug pull of the year? In other words, is it too late for investors to consider buying gold?
Remember, diversification is just an explicit recognition that we don't know the future. And if you are truly diversified, something in your portfolio is going to be killing it, and something in your portfolio is going to be killing you. And so now, is it too late? I didn't have any. This thing has gone straight up. And the challenge in a market like that is, we're hearing a lot about it's overbought. Overbought doesn't mean over. Overbought means, it's a strong trend. I would say, no, it's not too late. From a structural perspective, I don't see these things attenuating. The macro backdrop of fiscal dominance, rising debt, inflation volatility, this sets the stage for gold to play a much bigger role in portfolios from a portfolio perspective, from a diversification perspective. And I don't think any of those things are going to go away quickly. Now, price is going to deviate around the mean. And so if you didn't have it as a policy sleeve, I think you've got to take a crawl, walk, run approach.
I think there are two main ways to view gold in your portfolio. First, you can view it as a strategic asset. So just like your stocks, you buy and hold, and then you hold your nose. I do think this view does require a certain level of conviction, not only that gold is going to hedge all the holes that might be present in your portfolio, but that it will also be a return driver over the long term. But like Mike said, you can always crawl, walk, run. Secondly, you could view this as a tactical asset, something that you buy when it's trending, but something that you don't invest in or even short when it's dipping. Or you could do a little bit of both. Personally, I find the trend allocation to be a more compelling argument, and this is why, yes, I have gold floating in the ether. And that's because it's currently trending. If gold wasn't a trending asset, I probably wouldn't own it. But I do understand the view of investors who want to diversify their portfolios by buying and holding. But if you want to learn more about trend following, which has historically been a great way to diversify your portfolio, make sure to check out our videos on trend following in this channel. But what do you think? Is gold a buy, hold, or sell? Let me know your thoughts down in the comments. That is it for today. Thank you so much for watching, and remember to like, subscribe, but more importantly, share this video with a friend. This is how we grow and how we're able to give you golden content like this. See you next time.